Hi, and welcome back to the Vancouver Life Real Estate Channel. We have created a 5-part mortgage series with our colleague and friend, Mychal Ferreira from the Bank of Montreal. In this series, he answers the most asked questions when it comes to financing real estate. The topics include how and when to finance a pre-sale condo, your options when it comes to down payments on a home, how and how much equity you can access within an existing property, the best ways to finance investment properties, and lastly, how to purchase real estate within a corporation, especially good episode for my realtors and other business owners who operate as an incorporated business. Our guest Mychal has been with the Bank of Montreal for over 15 years now and consistently finances more real estate than any other mortgage specialist within that organization across all of Canada. Safe to say, he knows what he's talking about and has some incredibly valuable information to share with you. The 5-part series launches on Thursday, February the 23rd, and new releases will come out every Thursday at 3 p.m. They're quick 10-minute episodes that get right to the topic at hand. Be sure to check them all out, as I found them incredibly informative and know that you will too. All right, let's get into today's episode. Welcome to this week's edition of our mortgage series with Mychal Ferreira from the Bank of Montreal. Today, we are discussing how people who have incorporated businesses can apply for mortgages. Because of course, as we largely know, if you have an incorporation, you will often pay yourself personally quite a bit less. Shout out to all my prec realtors out there, for example. So I've got a personally vested interest in this episode, of course, as that is my personal setup too. But as always, Mychal, thank you for joining us today.
Thanks, guys. Good to be back.
For sure. So I guess right off the top, let's start with an easy one. How many or what percentage of clients that come to yourself and BMO have this type of situation where they're incorporated, but they pay themselves maybe dividends or whatnot, but a very little amount because of, taxation?
Yeah. So actually, for me, I do a lot of these. Actually, it's what I specialize in. It's my favorite thing to do because there's a lot of misunderstanding out there, and you know what others misunderstand. I love understanding. So the common thing is you have this company, right? It's just the entity, right? That where all of your gross income gets rolled into, your deductions come out. Then, you got your dividends and then, your net income. And oftentimes people who pay themselves very little personally, because the idea is always the same. You want to save on the personal tax, which I get, right? And it's funny though, every single time that I see these situations, I get the same explanation. But I did this to save personal tax. I'm like, I understand. Nobody enjoys paying tax, and I get it. And lenders, for the large part, in the past, I was like, well, you can't have your cake and eat it too. You don't get to save tax and then also, qualify for that $1 million mortgage. Well, that may not be the case, right? There is lots of opportunities to look at this and in different ways, but there is things you should know, right? So, the first thing that we look at when we're trying to look at qualifying someone for their business, right, is what do they do? How long have they been doing it? What kind of businesses? We want to really understand, right? So, the most common one that I see is a lot of, doctors, dentists, professionals, and obviously realtors, where there's either commission-based or, there's a sales-driven, incentive, right? And, if it's easy enough to understand and explain, the numbers on the financials speak for themselves. So the first thing you can do, have your taxes up to date. Okay. Very, very, very important. And if you can avoid it, try not to buy a place in February or March. and just because it's tax time and it's always, we got this whole year behind us that we're trying to figure out. So, there's definitely things we can do for that. But generally speaking, if you have your, let's say you're mid-year, right? I'll explain after about what you do if you're in this time, but you're mid-year, you got your taxes completed personally, you got your business financials, great. So what we're going to do is first, I usually team up with someone at our commercial banking division, and we look through the financial statements and we say, okay, well, looking at the business, what's the strength of the company, right? What's the strength of the entity, right? And if everything is said and done, at the bottom, your net income is $200,000, right? You've paid yourself maybe, 50, 60,000 personally. Well, we can look at that net income and add that back to your personal income it's called a what if scenario, and help you qualify for that bigger mortgage.
Hallelujah.
Yeah.
Well, I love hearing that because it's shocking to me, working with a lot of investor clients in similar situations who say, my bank will not look at my incorporated income when I'm trying to buy this property personally. And I'm like, it makes no sense. This person, it's the same person. It's the same revenue. They have access to both.
Yeah.
How could you not understand how stable, for example, that person's income and financial position is?
Especially if they own 100% of it.
Well, this is the thing. There's some preferences that we look at, right? And we want to make sure that the net income is consistent, right? Because you can't have 1 year where your net income after everything is 50,000, and then the next year is 500, and you're expecting to use 500. No, of course not, right? But if you're averaging 200,000-300,000, per year, and it's very consistent, we're proving consistency there. Then we can bring that into the conversation. The other part is, of course, we'd like to see you be 100% owner of that company. That's a big piece, right? Because if we're going to say, well, you have the ability to draw out X amount from the company as personal income, you kind of need to be controlling that company in its entirety.
Absolutely.
And when there's partners in other companies, there's additional discussions there. It is doable. It's just less likely.
As long as you're the majority shareholder or something. To that
exactly.
degree.
Yeah. And even then it becomes tricky, right? Because, your ability to draw out as much income or as little income as you need, if there's people involved, is not your 100% decision, right?
I mean, ultimately at the end of the day, if the entity makes 200,000 and you own 60% of it, you're not drawing on the 200,000.
Exactly.
Yeah.
So where we see it, maximized is for, realtors and doctors, dentists, professionals, people who are 100% owner. And essentially, the work, the entity is just an in-between, right? Where it's not necessarily a company, but it's, you're just driving your income through there.
So because I've often heard of a lot of entrepreneurs having to refile their taxes to show a different income in order to get the mortgage that they need. So are there additional tax implications here that they need to be aware of?
So oddly, no. You do your taxes as you normally do, right? It's just for us, we're looking at the company's financial statements, and that's where we're deriving the income from.
Interesting.
Right?
So it's pretty straightforward.
It absolutely is, yeah. And the other thing you can do yourself a favor is, okay, if we're going to say you're going to draw out that you have $200,000 net income in the company, and you're going to draw 150 of that to help support your personal debt servicing. It's great to have that money in a business account in some form, right? So it's either in a business savings, invested in a GIC, whatever. But it's good to have that money there, because what we're drawing there is, look, there's consistent net income in the company. There's cash in the business they could take out tomorrow as that income. And that will help us drive that approval further. I've had situations where, we've used 30% of the net income, and I've had situations where we've used most of it. And where we drive it the hardest is, it's mostly with people that are buying these high value properties, usually high earners, right?
So would there be like a major discrepancy if, say, you paid yourself 50 or 60,000 and your company's making 500 or 600,000? Are you going to get a call from the tax man if you're starting to really, I guess that's not really your area of expertise. I shouldn't put you in that position. But ultimately, I guess I'm wondering what's my exposure to this? Like, what's my downside, and is there some?
So this isn't a tax thing. Like this is what you've already done.
Right. This is post that.
Yeah, and this is more of a lender thing. And what we're doing here is we're just basically, using the information you already have and using it to help get you a higher approval.
Right.
This does not involve
refiling
no, because ultimately we have the information that you've already compiled and provided to CRA, right?
Cool.
It's just that majority of people are going to minimize the amount that they take from their corporations all the time.
It's incredible that this exists, and yet it's so unknown.
And it's not known for a lot of reasons. I think it just depends who you're talking to, right? And, like I say, this is a specialty of mine. I love doing it. I didn't just figure this out overnight. It took me, several years to figure out how best to put this together. And these other tips I'm giving you about, making sure that you have consistency, you have the balance in the business, you're 100% owner. These are things that I know get me to where I need to be from an approval standpoint. Right.
Gotcha. Are there times when you will look at somebody's corporate structure and actually advise that they buy it within a corp?
Yeah. So great question, because there's a misconception that you cannot buy personal property under a corporation. You can, and you can do it under a holding company. It has to be non-operating. and you have to be 100% owner of that company. But what that allows you is to move money between your corp and your holdco, right?
Yeah.
And by doing so, most of the time it's for investment purpose, right? But yeah, as long as you could open a brand new holding company, buy a property under there, you as the personal guarantee, but still involve all of the corporate
money.
Structure.
Right,
Yeah. And this is, again, a common thing that I do. Yeah.
Great to know.
I'm kind of mind blown right now. I mean, I knew there were benefits, but at the end of the day, I didn't realize it was quite to that advantage.
Do you work with people's tax advisors during this process?
Yeah. So when you have a more complex tax structure where you have corporations, and I've done things where I actually need to have an organizational chart where there's that many companies involved, because we understand the flow of all the money, right? Yeah. I like talking to the accountants directly. Just put me in touch with your accountant. I'll get your taxes, your financials, and if there's questions I have, hey, I saw money move from here to there. Is this operating? What's the flow, etc. Again, that all helps me when I'm putting my application together, right? And so having a good accountant that's able to and wanting to communicate with your lender is so important.
Yeah,
it can be the difference of, I've seen situations where a company sustained a massive loss for whatever reason, and usually it's a tax play. That means all the net income is gone, but the company's still actually operating in similar fashion. It was like a one-off, where now they're like in a massive deficit. Well, I just go to the accountant. Okay, well, can you explain that? Let me understand that. I want to, write it all out. Okay, I will then go and provide that to my underwriter.
Right.
And okay, well, it's an isolated incident. We can move past it.
And here's why.
Right. Yeah. So, having your lender, your accountant, like a lot of the people that are really going out there and maximizing their lending, buying properties that are, good value and making moves, we're all involved. I'm talking to the accountant, realtor, lawyer. It's a true team thing, and that's where it becomes less about, shopping for that little bit of a 5% discount or whatever it is, and more about the, the whole plan. Are you lending? Are you getting more on your lending? Are you getting 80% financing on that $3 million home? And I can guarantee you the majority of people can't do that. How can I versus other people? Well, again, there's always things we do and look at, and it requires a lot of experience and a lot of hard work, but by having all these pieces in play, it makes you as strong as possible.
So good. Yeah, and I really appreciate you kind of mentioning having that strong team.
Yeah.
And this is definitely something that comes up all the time with the investment side of things as well. Work with a mortgage specialist who understands rental properties. Work with a realtor who understands rental properties.
Or
have a lawyer who, well, that's best case scenario.
Yeah.
Exactly,
Yeah.
right? So by building a team of people who truly understand what you're looking to do, because they've done it themselves, you're really setting yourself up for success, right? Because they're not going, well, what is this? They're true advisors because they're specialists.
Yeah. And there's misconceptions out between brokers and banks, and the reality is, look, I'm a mortgage specialist and I work for a bank. I'm 24/7, 365. And I don't follow the same kind of, your bank doesn't do that. I believe that the person who is doing your deal is more important than where they're from and what they do. I don't think there's a massive benefit with working with a broker. I don't think there's a massive benefit with working in a bank. I ultimately think it's the individual. So, that's an important piece to put out there, because you could line up 10 mortgage brokers, 10 mortgage specialists, give them one, and everyone will try and
10
figure
different
out.
Scenarios.
Exactly. Yeah. But one of those, or two of those actually make the most sense, right? So important to know that.
Yeah, I completely agree.
Very well said. Okay, well, for anybody out there with a corp looking to maybe make some moves with their real estate portfolio or primary residence,
Yes.
how do they get a hold of you?
Yeah, so you can give me a call, shoot me an email, or find me on Instagram.
Perfect. We'll include all those details in the comments below. Reach out to Mychal. He is a true professional, and we can both be testaments to that.
Yeah, absolutely.
Thanks as always for being here.